Hello, everyone. Welcome back to the Switch Markets community. I'm Shane Vernier, and this is handicapping and trading the core PCE price index. Just kidding. The core PCE numbers did not come out today as expected because of why the U.S. government shutdown rolls into its 30th day or 31st day. I really don't know, but I do know this. We're not getting any inflation data. We're not getting any inflation numbers, and that's always going to be a challenge for those of us that are trying to figure out exactly where pricing stability stands and what the Fed is likely to do next. I think that we're in an interesting situation right now. I've got a couple of stories that we're going to cover that really suggest that there's not going to be much risk appetite on the table today. And I got a great question. It was actually more of a comment over here in the How to Trade trading room. Gordon Williams just says, hey, everything's sideways. And I said, yeah, everything is sideways. And the reason why it's sideways is because right now, going into the weekend news cycle, there is very, very little motivation for anybody to take a position on anything that is involved in a risk asset. There's two major reasons why. I'm going to outline them here today. Before we get into these topics, like I said the other day, I don't deal in doom. I'm not a fear porn guy. I don't want to scare anybody. But what I will do is I will tell you exactly what could impact the markets. I will tell you exactly what could drive these things directional. And you always have to remember this. If this stream goes off of the air tomorrow and you never hear from Shane Vernier again, all right, here's what you need to remember from my streams. Number one, if it makes money, it makes sense. Okay, that's great. Number two, the biggest news events, the biggest things that shake the markets up happen when they're closed. They happen when they're closed. The big votes in the Senate, the moves to war, they all happen when the markets are closed. So it's either after the Wall Street close during an overnight or it's during weekends. We have seen more news break on the weekends than I can count. In 15 years, I remember Arab Spring developed very rapidly, happened over the weekend. All right, when Gaddafi was thrown out and oil prices just went absolutely crazy. When did it happen? Happened when the markets were closed. So always remember this. What I'm going to tell you is two stories that it could shake things up dramatically from now until Monday's open. So I want everybody to really trade today and take your positions home, understanding that you could wake up in a very different world Monday. And I do that pretty much every Friday, but this Friday, we've got a couple of reasons, and it looks to me like there's going to be some real serious things that go down over the weekends that are going to scare people. They're going to shake things up. And there's going to be no question about where certain assets are going to be for the near term come Monday. Now, we're going to see exactly what happens. But like I said, I don't have a crystal ball. I don't know what's going to happen, but I do know a few things. And I know that we've got two stories here that could absolutely shake things to their core. So no inflation today. My apologies. If we had the number, we'd go over them. We talk conventional economics and conventional monetary policy. We don't have it. So if we don't have it, we got to do something else. T. Marina, good to see you. T, yes, sir. Always a pleasure, guys. Welcome back. Dave F19 Atuku, good over in the How to Trade community. Okay, let's get right out to price action because this is one that I'm watching closely. And it looks to me like a couple of our stories are really going to dive into. They're really going to dive into our commodities markets, and they're going to drive them. Right here, you can see our natural gas crossover. We talked about 920 EMA crossover. Well, there was the buy signal that came across the board, almost a few weeks ago now, back on the 20th of October. So that's a full 11 days ago. And you can see that big pullback here. And now we're rocking and rolling. And there's one reason why we're really headed higher in natural gas, and also why crude oil, a lot of people are saying crude oil is exploding right now. It's not exploding, but it's definitely in a situation where we have to be bullish going into the weekend. And that's against all of my market reads. But as the data comes in, as we see different market drivers emerge, we've got to evaluate exactly what these market drivers can do to the market in question, to the product in question. Commodities are where the volatility is going to be. You're not going to see much action out of stocks today. And the reason why is risk assets and risk appetite, the appetite for risk assets, that's off the board right now. Absolutely off the board. So let's see Lewis. Good to see you, Lewis. Yes, sir. Reasons why I never hold through the weekend. Might see the market open up and you're the one liquidated. 100%. Yes, sir. It happens to everybody. I think this weekend, fortunes will change. People are going to make bad decisions going into today's close. And a lot of those people are going to be novice traders. Some of them are going to be professionals that believe that they can see the future. I don't know. I can tell you this. Let's run through a few things, then I'm going to show you exactly what I'm talking about. Welcome to Switch Markets community. If you need a broker, And we went over our suite of tools yesterday on the live webinar. If you need a broker or something, head on over to switchmarkets.com. Check out all the bonuses, all the 0%, not 0%, but zero commission accounts. A lot of benefits there, a lot of things that you could really capitalize on if you're an active trader over the Switch Markets community. Very, very important that you take a look at that. As far as the trade update, Great Britain pound, Australian dollar in play. Let's go ahead and get out to price action. Been really tough. This has been tough. I mean, I thought we would have a much easier. This would be much easier, and it's been rough. This has been a fist fight. This has been, just buyers and sellers duking it out. I'm still confident, believe it or not, this is going to rotate up to our green line, which is the profit target. But right now, this has been a real pain. I mean, I haven't enjoyed this at all. Let's get back over to my chart here. I haven't enjoyed this at all. I mean, this has been one of those things where you just look at it and you go, God, this has been a nightmare. And it really has been. I mean, you've had sort of a big sell-off, and then we sort of rebounded back up to our key level there, which is right around 207, 208, somewhere in that zone. And now we're just sort of rotating around. I still like the opportunity here potentially to get back above this line, this 209-ish. If we close up there in this Great Britain pound, Australian dollar, got a real good chance. Got a real good chance to make a few bucks there. So a lot going on in this pair. This was one of our trade ideas from earlier this week. It's still not dead, believe it or not. It's still not dead, but it's got a legitimate chance to come up and get paid. But, man, it is really difficult to hold anything over the weekend. So I would understand just exiting stage left and maybe coming back and trading another day. We also have a one live in the Great Britain pound USD that's performed a lot better, but still it's taking a little bit of heat at this juncture. This one right here, no PCE date out. A live look at the Kiwi. The Kiwi is really a popular major. I mean, if you're into trading the U.S. dollar, a lot of folks really like to play it against the Kiwi. The reason why is over the years, the Reserve Bank of New Zealand, I guess the RBNZ, the New Zealand Reserve Bank, whatever, this has been one of the global hawks, and that's changed over the past 18 months to 2 years, 24 months, because there are economic growth concerns in New Zealand. So the idea is, are you going to cut interest rates to try to stave off an economic meltdown or a recession, or aren't you? And right now, New Zealand's sort of been dovish. Over the years, it was a great carry trade. People would just go ahead and snatch up the Kiwi and just hold it because the interest rates were always relatively high. It was a very controlled economy that sort of had everything. I mean, it really had all their ducks in a row in a lot of ways. You had steady growth. You had higher interest rates. You had sort of a healthy economy. That's changed. That's changed really since going back to COVID, and that changed it for a lot of different areas in the world. Right now, you're seeing the USD sort of dominate here against the New Zealand dollar, and is it rare? No, it's not really rare, but is it to be expected? No. Especially when we're talking about how bad the dollar's been against everybody else this year. All of a sudden, the dollar, I mean, if you want to take a look at the monthly trends, it's relatively straightforward. Take a look at the chart. I mean, it is what it is. Nice big rally there, June, and then right now we're coming back down. There's a good chance that we're going to close right down there at yearly lows, which are right around the trade war, the tariff concerns. I'm interested in this pair. I think that we've got a couple of great trades probably by the end of the year coming our way. On the daily, this was going to be a real short time frame trade. Daily chart, we were looking for a pullback right up there to right around 57.44. We almost had it earlier today, but almost isn't good enough. Close enough. Horseshoes and hand grenades. It just isn't good enough. So when I look at something like this, I say I wanted the short. I'm bearish. I wanted the short, and we didn't get it. So right now, this trade is still on the board, but honestly, I can't see it really 57.14 holding up as being the lower extreme of this three-day loser. I think that if we do get a pullback up in here, you could definitely nail it to the short. But right now, are you really going to bounce off of 57.14? We're trading 57.18. That's going to get wiped. So if it does get wiped and we move lower and lower and lower, early next week, the trade will probably look something like this, which is fine with me. I have no problem with that. The market does what it does. Remember, the market's always right. You cannot outthink the market. The market is always right. If you think that, I know what it's going to do, not really. All you can do is control your risk, control your trade management, and control your entries. And that's where our technicals come in. That's where our market savvy comes in. And that's really what it's all about. Tina, good to see you, Tina. Hi, Shane. I got an oil long at 61.06. It went up and was triggered. Then it's been down, hovering now around entry. Yeah, I mean, this is going to be a real difficult day to really trade anything. And I'm just going to get right to it. I mean, we've got the news stories with the EBT shutdowns here in the United States coming tomorrow. Also, we've got big news that's breaking. It looks like a strike against Venezuela is imminent here from the United States. And the thing about Venezuela is they're a major oil producer, and when they get hit, price of oil is going to spike. It just is. It may be one reason why we're above 60 right now. I've been outspoken as being bearish crude oil. There's no question about it. But this seasonality, couple that with maybe a kinetic exchange in the Americas, we haven't seen that. We just haven't seen that, and it looks like it's a foregone conclusion. So if you're trading crude oil, be ready. I think that going into the weekend, if you hold longs, Tina, you're probably right. You could be really right if the military action comes the way that most of us think it's going to. But if they don't act, and there's a peace deal or something or an agreement, or they bring the aircraft carriers home, oil crashes. So I don't know about holding any positions over the weekend. So if you're long from 61.06, it's not necessarily the worst trade in the world as of right now, but you understand how exposed you are from a news standpoint. The news is dictating everything right now. It really is. And it always does to a certain extent, especially with commodities. But realistically, I mean, this is a 5-minute chart. You've sort of seen that big crash. It was back a couple hours ago, hour and a half ago. And since then, we've sort of been grinding back up in. But look, the volume spiked. My guess is right there, 9:45 a.m., right before lunchtime on the East Coast, 11:45 a.m. My guess is maybe somebody leaked that the attacks were off for this weekend. And I haven't really told you what's going to happen yet, but that could definitely be. What I'm saying is, Tina, is that's how sensitive U.S. oil is on a day like today. It is sensitive. And I could see where if you got triggered on a long, and then you're really looking like a real beautiful rally here during the pre-market, because that's when a lot of these reports started to surface. And then what do you got right there? Sort of your first 5 minutes after that traditional 9 a.m. NYMEX open for WTI crude. That's when the volume comes into the market typically, right around 7 o'clock my time, 9 a.m. Eastern. That's when it comes on that's when every day it comes on the market. Now right here, you can see back right around 6:35, that's 6:30. Okay, that's when we had sort of a big rush of volume in there. Don't know why, but you get right up in here. That's really the open is right there. So you get the big rush of volume, and then things really die down. And this is a 5-minute chart. They die down until here. So a lot of people think they see institutional footprints. They think they know where the big guys are trading, and read the volume. 3,500 contracts in 5 minutes. That's legit. That's a lot of action. That's institutional action. That's block orders. That's somebody knows something. And now we've been on a comeback trail. Look at the volumes. I mean, I need to probably make some videos on how to read volume, but when you see something like that, I call that a sweep. That's a sweep. Basically, a block order hit the market. The algos jumped on and swept price lower by almost 0.75%. That's really ridiculous. That's tough to deal with. That sweep right there, especially on a futures market, that will bankrupt you quickly if you're long for and you get caught up in a 5-minute sweep like that. That's hard. That's really hard. That's why we use stop losses. That's why we use risk management. But since then, you'll notice that volume has dropped right off the table. And what do you have? You've got a 5-minute chart where we're just grinding. So right here, you're right around break even. I understand. All about the close today. You've got about another hour and a half, about another 90 minutes of not premium, but high volume oil trading. After 2:30 p.m. Eastern, it will drop off, and then it's all about the news. It really is all about the news for the rest of the day. I believe that I'm very rarely around for the futures close. I believe it's at 3:15 my time, so like 5-ish. 4:45-ish Eastern time, these futures markets are going to come off the board for the day. Got to be very careful right around that time. So if you're in the UK, that's going to be, what's that going to be, 10 or 11 at night, somewhere in there. You got to be really careful because going into the news cycle we're going to have for 48 hours, anything can happen. And I mean anything can happen right before they stop trading those futures contracts. The U.S. oil CFD, your WTI CFD, whatever you're trading, is linked to front month futures, which right now is December 60.91. We've got about a 1-tick tracking error, not a tracking error, but a discrepancy between U.S. oil and WTI crude futures. Very risky, very, very risky just because of the news cycle, for sure. All right, so that was sort of our trade update there. I still like this Kiwi trade. I just don't think we're going to get it today. Week 44, you can see what we had. I mean, today I was looking forward to talking inflation. No, sir. No, we're not talking inflation. We're talking all sorts of different things. Not inflation. We're going to talk news, basically. No Donation Friday. This is my secret sauce. People say, Shane, how do you manage your trades? How do you manage your life? What do you try to do in the markets? The bottom line is this. Trading is all about momentum. It's about momentum. It's about getting started on Monday, riding the wave Tuesday, Wednesday, Thursday, and then throttling it down on Friday. I say this because I've been there. I've done it. I've done it so many times in the markets. I had a decent week. It's not necessarily the big weeks where you give back some on a Friday that hurt your feelings and really throw you on tilt and make you say, what am I even doing with my life? It's not those days where you're up $5,000 for the week and you give back $2,000. You're still going home with $3,000. Okay, 3,000 pounds, $3,000, 3,000 whatevers. You're still going home with money. It's the week that has been tough, where you're up $500 or you're up $750 and you give all that back on a Friday. Those are the weeks that get you. Those are the weeks that get you because you worked hard and you didn't have much to show for it. And you're sitting there going, okay, well, is $500 really my goal for this week? No. So going into Friday, what's the mindset? Well, it's only $500. Maybe I could take more of a risk and try to juice that up to $1,500 or $2,000. Maybe I'll get in there and make it happen. And that is the nature of trend traders. That's the nature of breakout traders. They get in there and they say, okay, I've got $500. I've worked hard all week. I got $500. Maybe I catch a trend. Maybe I can run this thing up to $2,000 or $2,500. I just got to get in on a move. What are you doing right there? If that's the mindset, what are you really doing? I just got to get them. I got $500 to work with. We got to hit this up. We got to triple this up. I just need a move. And you're scanning the board. You're looking up and down the board saying, what's going to move today? And then you get into a situation like what we have today, more times than not. This is the situation on Friday. It's a choppy sideways mess. So you're trying to make something happen that's not there. And in doing so, what do? You give back your $500. And in most cases, then some. I've done it. I've done it a lot. I sat there saying, well, I'm up 300. I just don't care. I just don't care. If that's your attitude, if you're an apathetic trader, quit right now because you will lose all of your money. Care about your money. Care about your time. Now, you put the time in for the education and you learn strategies and you do all these things to fine-tune your approach. But you have to get in there and say, okay, damn it, I fought my ass off for $500. I fought hard for $500 this week. I've got to have something to show for it. I've got to have something to show for it when the market closes today. I have to. That's my mindset on Fridays. So when we start talking about all the different ways you can manage your money and manage your risk, No Donation Friday stems from all of that. I had to find a way that I stopped giving back my $500, that I stopped. And listen, it's bad enough if you're up $500 for the week and you give all that back and then you give back some more. Well, okay, I had $500. Okay, I guess I'll risk another $500 to try to get back to what? Get back your original $500? Do you see how slippery of a slope the money management gets in this game? It's really difficult to overcome if you're sloppy. Don't be apathetic. Care about your money. I highly recommend this type of a strategy to help you stay in the market for a long run. Is it perfect? No, it's not perfect. Will professional traders watch this stream and go, you're an idiot? Of course they will. They go, well, I trade every day the same. And I go, great, you have $250,000 in your account. I'm talking to the trader that has $5,000. I'm talking to the trader that has $10,000. I'm talking about retail traders, the person that's just starting out that has $500 to start with, or the person that's working on a prop account. That's who I'm talking to here. We got to make sure that we're in it for the long haul, that we build small and we build up responsibly, and a big part of that's momentum. So what do you have here? If you have a winning week, you bank 50% of your profits. You make $100, you put $50 in your pocket because you have $50 and you worked all week. Is it enough? No, it's not enough. But is it something? Yes, it's something. I don't care if you take that $50 and go out and I mean, I used to be able to go out to dinner on $50. Now you got to go to McDonald's or Taco Bell or something. That's fine. Go ahead and do it. Go out and have a few beers and say, okay, this is what I made this week. Next week, we're going to make more. That's the mindset. If you're having a losing week. If it's a small losing week, you can trade as usual. Because if it's a small losing week, you're not getting killed. You're not getting destroyed. You have an opportunity to get in there and maybe make a few bucks on a Friday. Go with it. You're within your risk parameters. Nothing's wrong. If it's a big losing week, that means you're getting destroyed. That means your strategy's not working or you're making mistakes. If that's the case, you have to throttle it back. Trading's all about pace and momentum. When you're losing, throttle it back. If it's a big losing week, you should consider waiting till Monday to trade. I think you need to not trade Friday. And that means, listen, you can work your strategy. You can sit down and look at the charts. I recommend not even demo trading on Friday. Because if you demo trade Friday, you know what's going to happen. You're going to take that emotional component out of your trading, and you're going to make a stack of money. That's almost a given. I've lived it. I've done it. Maybe look at your charts. Maybe say, okay, I like these levels for oil. I like these levels for the dollar. I like the S&P here. And then turn them off, come back, do a little evaluation Sunday afternoon, get ready to go again Monday. That's what I highly recommend. Now, if you're neutral, if you're flat, you can trade as usual. That means you've won some, you've lost some. You feel pretty good. Okay. You could also reduce your leverage saying, things aren't going really well. I'm not very hot. I'm not seeing things. The markets are maybe flat. Or don't trade at all. It's your call if you're neutral. For me, if I'm neutral, I usually go in, trade as usual, first trade. If it goes well, then potentially I look at walking away just because I say, okay, we had a winning week. Let's go home. If that first trade's a loser, I'll either take one more trade or I'll reduce my leverage or I'll stop. That's what you have to do on Fridays. Remember, Fridays are about preserving momentum. It's absolutely important that you keep this thing going in the right direction as long as you possibly can. That's absolutely important. So that's No Donation Friday. Sort of a look into my playbook. I put that one together off my own beats. The news of the day, none of this is really important. You have, of course, CPI and CPI coming out of the Eurozone. CPI came in at 2.1%, really unchanged. Ticked a little bit higher for October. These are all preliminary numbers. We'll look at the Euro here in just a second. But, to me, not really much going on here. You're off about, 1/3%. You're seeing a bit of a bearish trend develop. All in all, we had we were looking to get something else done here potentially with this daily chart. Let's go ahead and get rid of that. I don't even really remember that, to be honest with you. But this right here, nice big 3-day loser, sort of what you're looking at in that Kiwi, right? So we're going to have some great trades. So if you're on a No Donation Friday and you're sitting there going, ooh, I want to trade, a lot of people are just going to dive in and say, okay, the Euro's trending, it's off. Let's go ahead and throw down. It's not really off that big. You're off 0.4%. That's nothing. Third losing day in a row. Okay. Did we break through this double bottom back in early October? Yeah. So what do we want to do? If you sell right now, you're getting the worst trade location of the day. You're selling the daily low with just a few hours left in the trading week. I would say no way. No way. Now, is there a trade that we could look at for early next week with the Euro? 1,000%. Wait for today's low to be in. Fibonacci retracement from there to today's low, we're looking to sell 38%. Absolutely. That's probably going to be an idea early for next week. A lot of folks really love the Euro. I like trading the Euro. I don't have a problem with it. Weekly, what's going on weekly? Put everything into context. We have chopped sideways, really going back all summer long. We're starting to open up the throttle a little bit to the downside, which is fine with me. Now, we have 2 months left in the year. We got November, December. I'll tell you from experience, we've got about another 3 weeks. Tomorrow's November 1st. Today's Halloween. Happy Halloween. Tomorrow, November 1st, you got about 3 weeks to do some work in November, and then it dries up for the holiday. And then coming back, we'll have probably one week, maybe 1.5, 7 sessions there in early December, and then people kick off for the rest of the year. That's the way institutional capital works. Remember, a lot of times billionaires really like to work. Billionaire traders typically know when they should trade. The holiday season's not one of them. But this right here is going to be interesting for us, especially late in the year. We're starting to see the market move. It hasn't moved in a long time. This is pretty good compression here. Nice big value area. There's your doji. Here we're coming off. I love this chart. This is our monthly chart, 112.50. Okay, we're a ways off of that. There's no doubt about that. But look what else is there. Your EMA, your 13-period EMA is right at 112.61. That zone between 112.75 and 112.50 is a big one. Do we get it in November? Maybe. Do we get it soon? Maybe. There's a lot of things here. If war breaks out here, you could see a rush to the U.S. dollar. You could. That zone right there, though, I absolutely love that for the Euro USD. Great zone. I'm watching that closely. Chicago PMI, 43.8. That means next to nothing. I put it in the write-up for today's trade idea. 43.8. It's well over what was expected, well over the previous release. Anything under 50 is seen as bearish, though, and negative for the U.S. dollar. And if you pull up a historical chart for the Chicago PMI, you'll see where the levels were before COVID shutdowns, and you'll notice in a big way that it's nowhere near. The manufacturing sector is nowhere near where it was before COVID. It's still negative. It's growing. It's still negative, though. Anything under 50 is seen as bearish, where anything over 50 is seen is sort of positive or bullish. And that's still a negative number. It's trending higher. The good news is it doesn't really matter much. Nobody's sitting around looking at the Chicago PMI except the people that made the Chicago PMI, which I believe is the Chicago Fed. Nothing wrong with that. That's for sure. Okay, I got way behind, guys, on the live chat. My apologies. I always like to try to stay current on that, but there's a few questions over there. Let me see. Yes, sir. I agree for me. Tuesdays and Thursdays are my best days to trade. That's all you can ask. If your best day is Monday trading, that's fantastic. Understand that, okay, this is my best day. This is when I see things the best. For me, Tuesday, Wednesday, Thursday is pretty good. Wednesdays are tricky. I haven't got into it, but I told you last Wednesday, I don't trade Fed days. I've taken big losses on Wednesdays over the years, so I'm skeptical, but I still like the price action on Wednesdays. I typically just don't trade crude oil because of the EIA. Maybe one quick trade in the morning, maybe a late one if we trade sort of range bound. But Wednesdays are tricky, but Tuesdays and Thursdays for me are very, very nice. And hey, listen, we've had some big Fridays too. We get CPI reports. We get all sorts of different reports on Fridays sometimes. The PCE report typically moves the market a little bit. NFP, really, those are pretty good trading days. You just got to be smart about what you do. And we try to cover those ahead of time so you know exactly how to approach them. Let me see. Sounds like gambling. Well, yeah, that sounds like gambling. So sure, a lot of there. Hey, listen, there's a lot of what we do is manage risk. And if you manage risk, gambling's not really gambling if you manage risk, right? Let me see. Sounds like gambling, looking for trades and looking at stuff that's moving. I want to catch that move. You're going to lose your money. Absolutely. If that is your mindset, I got to get in on that move. You're gambling. You show up on Friday with $500 in your pocket thinking you're going to roll it into $2,000 to hit your weekly target. You're gambling because the market doesn't always move. Let me see. T Marina, I'm a bit weary leaving my positions open after today's close to avoid that. Tightening my take profit. Well, it's time to get into the doomsday stuff. We're going to talk commodities, and we're going to talk some issues here in the United States that are not good. I'm going to keep the politics out of it. It seems like everybody out there talks politics now, and they got their convictions, and all that's great. Good for them. We're about money here. We're about learning how to trade and read what can influence markets. Now, the things I'm going to go over aren't on your economic calendar. And you're going to hear a lot of different things from the media when these things start happening. You don't really need to believe anything. If you have convictions, that's great. If you have moral convictions, that's fantastic. More power to you. Welcome to them. I don't care what side of the aisle you're on. But if you're in the markets, if you're going to talk about trading and protecting yourself and not being destroyed by what we would call an outlier, then understand the outliers that are coming our way. And they may turn out to be nothing. And that's fine. That's absolutely fine. But caution's a great word. Caution's the better part of valor. Being smart about what we do, especially on Fridays, can take your longevity in the market to the next level. Fridays are a very important time. They're a very important time. A lot of traders don't even trade Fridays. And if everybody in here if we all had the cash, or you guys all had the cash, and I had the cash where I didn't even have to look at anything on Friday, and I would just work 4 days a week or 3 days a week even, I would do it. And as a trader, you can do that. But for right now, we're all here ready to go. We need to understand what Fridays are. Fridays aren't like any other day. They're different. They're a lot different. Today is a lot different. Number one, last trading day of October. So we will see a flurry of action early November. We will see it. It happens every month. Long-term traders, institutional traders, they balance their books. Hedge funds, they balance their books according to time. They don't even look at charts. They do, but they don't really. They have time. They take positions. They look at macro trends. A lot of the way they balance their portfolios is according to the calendar, not the economic calendar, but the calendar. Last day of October. Very important. We're going to be looking at the first trading day of November on Monday. Interesting. That will generate in itself on that electronic open, that will generate some action. Okay, Monday's session, I'm expecting it to be extremely active. Let's go ahead and see why. Right here, government shutdown. Government shutdown rolls on. There's all sorts of talk about going nuclear, and that means getting rid of the filibuster, and that would mean that the Republicans in the Senate would go ahead and vote with a majority, with their majority 54. I believe they have a 54-46, just something like that. Majority there, slim one. But it's there. They could vote to get rid of the filibuster. That's not going to happen. Trump says Senate should scrap the filibuster. That will not happen. But if it does, then you could see some funding pass relatively quickly. This is the big thing that everybody's talking about here in the United States, and the markets need to, I think they're pricing it in. I really do. SNAP, which is food benefits, food stamps. We've been talking about this all week long. EBT cards. A tremendous amount of money goes into this program, and a lot of it's needed. A lot of folks need some help, families and things, folks that are down on their luck, folks that have been injured. I understand. I get it. What we're looking at here is about, roughly $100 billion a year, so about $8.5 billion a month go into this program, and this is a huge social program, no question about it. These benefits aren't going to be paid tomorrow. So the EBT cards, typically it's just a bunch of electronic transfers from the federal government into bank accounts that fund these cards. Well, this isn't going to happen tomorrow unless they pass something in the next few hours, and they may figure out a way to get some money going out relatively soon. You're looking at a situation where it's an incredible political firestorm right now, but it's also going to impact the markets. And the reason why it's going to impact the markets is there can be extensive civil unrest. There's no question about it. There's been just thousands of videos coming out, looting, riots, things like that. I don't know that develops. I don't know. I really don't. What I do know is that if the situation goes on very long at all, more than, say, a few days or a week, there's going to be an incredible amount of pressure in some of these areas where there is a high concentration of these EBT cards. That's just the way that it is. So that leads to civil unrest, and civil unrest sort of throws the balance, not the balance of power, but stability here in the United States into question. If that happens, we talked about it earlier this week. If that is going to happen, then we start talking about debt ratings, national debt ratings from the big houses, Moody's, or Standard & Poor's. What are they going to rate the U.S. debt? If the U.S. can't pay its bills, and this is viewed as being a bill to the federal government, if they're not meeting obligations, what happens to that debt rating? We already saw it revised down. We saw it revised down last year. Does it get revised down again? I believe it went from AAA to AA. That's the sovereign debt rating. If that happens, everything starts to go into flux. The bonds, the U.S. treasuries, the yields, everything, the pricing, it all gets renegotiated. It all gets repriced. That will impact the markets. 1,000%. Remember what the Fed just said. They were going to start piling, $1 trillion off of their balance sheets or something like that into U.S. treasuries. We couldn't really figure out why he said that, but he said it. Okay, well, if that's the case, what happens to treasury yields if the U.S. goes from what is it, a AA, or it was a AAA plus, and now it's a AAA, I don't know, whatever you look at. What if that comes down again? That's going to really impact those yields. So be very careful with this. This is a situation where I just don't know what exactly happens. I think that this is an interesting dynamic. I'm not necessarily certain what we're going to get out of this. I expect a swift resolution. I'm surprised they didn't get a deal done this week. That's the first thing. This right here, the debt rating is huge. So if this has the potential to impact the bond markets, the treasury markets, and in turn it will impact risk assets. That uncertainty could definitely bring a lot of selling to U.S. stocks and rebalancing of international portfolios as well as hedge funds. Be ready for that. Be ready for that. Okay. Here's the second story. This looks like it's going to happen. Now, I didn't really want to talk about it, but let's go back. This right here. These reports are coming out. U.S. poised to strike military targets in Venezuela, escalation against Maduro regime. That was 6 hours ago. U.S. boat strikes spread fear across the Caribbean. A lot of drug boats have been hit. We've seen that not just in the Caribbean, but also in the Pacific. Trump administration could strike Venezuela at any moment. That's in Forbes. Report says. Clearly, these are leaks. Clearly, they're leaking this stuff out of Washington, D.C. It looks like this thing's locked and loaded. Now, what do the strikes look like? That's the other thing we have to say. What are they going to look like? Are these going to be airstrikes on drug facilities inside of Venezuela? If they are, that's a very limited engagement. And as long as there's no retaliation really from Venezuela, that's going to be that. That'll pretty much be the end of it. It'll look a lot like the Iranian dust-up where they sent in the stealth bombers and blew up the military installations. That's what that'll look like. Now, here's the thing. Maduro's been blustering, says I have 5,000, some sort of Russian-made ballistic missile. I don't know what it is. My guess is they're second-tier weapons, if I had to guess. This is major. This is major for a lot of reasons. This is major for your energies. Huge production region for crude oil. Now, it's not necessarily that the United States is taking a lot of this crude oil, but what it is that crude oil is going on to the global market, and this will shut down another outlet. So you've got the two big companies out of Russia that are now offline. So you've got Russian exports sort of coming offline. Then you'll have Venezuela exports coming offline in a big, big way, even the ones that are underground. That serves to shrink the world's oil supply. Now, if that does happen, it probably will be temporary, right? But what's that going to do to oil prices? It's going to send them up. We're already seeing the hedging in natural gas, hedging by meaning people are taking positions going long. So they're not necessarily hedging risk. They're taking a shot. So maybe they're hedging their portfolio with long positions in gas going into the weekend. That's fascinating to me. U.S. oil right now is up about 1.14%, right around that $61 mark we just talked about earlier. This is why. This is big. So, what to know about Trump's Venezuela strikes and how Maduro responded. This is hitting the news right now. Now, one other thing that's interesting, and if you are a food delivery person in the Washington, D.C. area, or if you're running a pizza parlor in the Washington, D.C. area, you might already know if we're going to hit them. I don't have any idea what the United States military is going to do. I'm out here in Montana. I have no clue what they're going to do. But if you're on the ground there and you're delivering a lot of pizzas to the Pentagon, this is amazing. I just found out about this today. Before Israel was attacked, the spike in pizza deliveries there to the Pentagon, it was at unprecedented levels. What does that mean? It means that everybody in there's working 24 hours a day getting the battle plans together. That's what it means. So you're looking at this, where are pizza levels going? I haven't seen any reports from Domino's or Papa John's or any of them where exactly the levels of pizzas are going to the Pentagon. But I'll tell you what, if you're delivering food there on the ground and you say, man, we have been here a lot this week, or maybe the dumpsters outside are overflowing or something, that could be a pretty good tell that they've been in there for a long time planning something that's very, very big. Interesting stuff. I think that it's a foregone conclusion. There's going to be some airstrikes at least on those installations. Trump could back off of them, though. He's been known to do that. He may give them an ultimatum, similar to what happened in the Arab situation in Iran, where he just said, "Hey, listen, we're going to give you a couple weeks to negotiate. I'm interested in this, and you should be interested in it too. If you're in trading energies, I do believe that's one of the reasons why you saw the major rally yesterday in natural gas of 7%, and then also 31st, that's today, Halloween, up another 2%. It's interesting. We're looking at June's high. If you get a big strike down there over the weekend, more than likely you're going to see that area tested. I'm not for, it's nothing's 100%, but if it turns into looks like a prolonged conflict, then you could definitely bank on these things moving much higher. As far as U.S. oil goes, U.S. oil is definitely on my radar. It always is. You take a look at the daily compression here. Really, back-to-back dojis and now a break today. That really suggests, you're up about 1%. Still not the move of the century, but you're in pretty good shape to the top side now. Now, I've been a big outspoken saying, hey, listen, it's time to sell. But I'm also not stupid. And you can't walk in with a potential conflict that close to the U.S. border, to U.S. territory. And Venezuela is not that far away. It's just right down there across the Caribbean. Caribbean's beautiful. But if you're in that region, also had a major hurricane go through Jamaica. It looks like that's not going to hit the Gulf Coast oil-producing region. That's going to take a right and go out into the Atlantic. But this right here, this type of conflict, if these are isolated airstrikes, and you knock out a few drug facilities, and then that's it, similar to what happened in Iran, it won't be that big of a deal. It won't be. Price will spike. It'll come back down. Okay. If Venezuela and Maduro decide they're going to start firing missiles at U.S. assets, we have a tremendous number of personnel carriers. We've got, I believe it was 25,000. Supposedly there's 25,000 Marines in the region. That's a lot. Also, we've got, I believe, aircraft. I don't know if it was aircraft carriers, but it was some sort of battle group they had down there right off the coast of Venezuela. The F-35s are in the air. If something happens to one of those boats or a large installation of soldiers, then it'll go to a ground offensive. And if it goes to a ground offensive, then crude oil is going to spike for quite a while. I imagine you'll see $70. If that is the case, nobody knows how it's going to turn out, though. I think that from a pragmatic standpoint, the Trump administration would probably want to do the airstrikes and just go with that. If that's the case, then it won't be that, it won't sway the crude oil market that bad. You'll get a spike up to price 62, 63, and then retrace off of there. But if it turns into a tit for tat and Venezuela mobilizes and you see some kinetic exchange between both nations, then it goes to a different level. Then we're talking about probably a few weeks in theater. And if that's the case, you're going to see crude oil go way up because we just don't know what's going to happen. That will mean regime change. And you don't know who the next regime is going to be. If it's a U.S.-friendly regime, then you're going to see a lot of the restrictions get taken off of oil exports, and that's going to boost, that's really going to boost oil supply globally and send price way down. It's a big deal. It really is a big deal. We haven't talked much about it because, well, we didn't think it was going to happen. Looks like it's going to happen now. So right there, a spike low to a spike high, you can see exactly where the bidders stepped in. There was no question about it, 38%, right around $60. We talked about that level earlier in the week. Sort of $60. I was thinking, man, probably going to come off. It hasn't happened. Beautiful bounce there. Now you're up at about 61. Shane, are you long or short? I'm neither. I'm short fundamentally, but this type of Venezuela situation, you have to rethink your position. I mean, you have to. So if you're holding shorts and you've held them, we've had some pretty good market calls in here on WTI crude. Not bad, really going back to this peak, this doji back in late September. October was a pretty good call for a bearish month, and it was. Rode that thing all the way down to almost your yearly lows. And this is the area that we really wanted to see tested and taken out. Before this Venezuela stuff, I said that's easy. We're going to test it and take it out. We bounced right off of yearly lows, not off of them, but we went right down to 55.96, right around 56, and then bounced. So we're then about 80 cents. And then we bounced up, realistically $4. It's not the biggest move in the world, but this time of year, it means that, there are problems out there for global crude, and we could definitely move higher. So for me, this would be a no-fly zone for me. I wouldn't do anything with it. If you're going to hold your longs, best of luck. Use risk management, because if these strikes don't materialize, and if there is a deal reached, or if it turns out to just be, okay, they blew up a few factories and that's it, then the price of oil will continue its downward trajectory. But if it turns into something else, there's no rules on how high it can go. That's for sure. So that's definitely important there in U.S. oil. Natty gas, I mean, this chart tells it all to me. People are getting ready for that strike. Let's see, got way behind right here. And then we'll take a look at gold and silver, because those are going to be interesting too for next week. All right, let me see. Ahmed, hello, Shane. Hope you're fine. I'm doing well. What do you expect of the crypto market? Okay, we'll look at crypto, and then we'll look at gold, and that'll probably be a wrap. Also, what shares might you recommend in U.S. or EU to be trading, which they got like a low cap, man? Shares are really difficult. I mean, here's one thing I would remember, Ahmed. Early next week, I believe it was the 3rd, Palantir is going to announce their earnings. People expect them to be through the roof. So if you want volatility, probably look at Palantir. Next Tuesday, I believe, is when the number drops. And that's just been, that thing's just absolutely taken off. And it's a big data company. You can do the research, but look at Palantir for next week if you want volatility. Let me see. Been hitting a bunch of drug boats in quotes, T. Yeah, full disclosure, I don't know what they're hitting. I don't think anybody does. They say they're drug boats. We know that there's a lot of drug boats that come in. And usually when those boats are equipped with the giant, 4 or 5 of those giant Merc cruisers, and they sit right down on the water, theoretically those are what's called a drug boat. I don't know. I'm not there. We just sort of have to take the intel's word for it. But, like I said, it's not up to us to figure out what exactly is going on. It's just up for us to figure out what's going on and how it's going to impact the market. That's it. On the ground, I have no logistical knowledge of any of it. None. Don't need to. Let me see. What do I think the real agenda is behind that, Shane? Well, it's a big campaign thing, T, from the Trump administration. And these folks, they've been against the fentanyl since day one. And, during the campaigns, they pledged to stop it. Trump pledged to stop it. All the folks he's got in his cabinet, they pledged to stop it. These are kinetic engagements. Well, they're one-sided kinetic engagements. I tell you what, T. Marie, and I don't know how old you are. I remember when I was a little kid, this is what happened sort of to Manuel Noriega down in Panama. I mean, when the U.S. was finally done messing around with Noriega, they went down and got him. And it looks to me like they're done messing around with Maduro. I don't know what a regime change does, because you never know who the next person up is. Panama's a beautiful country. I've been right down on the border with Costa Rica and Panama. It's a beautiful area, beautiful country. I mean, the jungle down there, it's unbelievable. A kid from Montana, I was down there when I was young, when I was 25, 26. I couldn't believe the size of the jungle down there. But I really had a great time. I enjoyed it, but that region was really ravaged during that period. So I genuinely don't know the real agenda. I don't think it's regime change because it's so risky. But I do think they're putting a tremendous amount of pressure for Maduro's own people to take him out. They put a $50 million bounty on his head, and nobody in his cabinet took it. That's unbelievable. That's a lot of money. You're sort of betting that the people within are going to fold it, and it really would be a non-factor to us either way if there wasn't such a bunch of natural resources there. The oil is Venezuela, and the oil is, unbelievable. Gold as well. But it looks to me, the real agenda, it looks to me like they're pushing for regime change one way or another. We'll see what happens. Whether that's right or wrong, I don't know. Let me see. Other than fueling up for the inevitable next World War, World War III is there. We're very close to it, closer than we've ever been. Cooler heads need to prevail. Everybody needs to understand it's time to back off. See what happens. What time do you come on every day? Cal B, I come on basically about 1 Eastern, 1 o'clock Eastern, 10 a.m. on the West Coast, 11 a.m. here on the Mountain Time Zone. I like to do that because it gives me an opportunity to look at the markets that day and sort of give you forward-looking analysis as opposed to showing up right on the open and try to scalp a few ticks on the open. I like to take a look at what's happened that day and then set us up for what's going to come tomorrow. I don't know. I don't know that it does a whole lot of good showing up and trading the open. I tried it for a while, but you can certainly do that, though. Probably should sit down and just trade for 3 or 4 hours. Let you guys tune in and out as you see fit. Probably should do. I've never done it. I probably should do it for everybody, but we'll see. All right, on crypto, I guess it will be a spike down if it happens. Market or batting condition. Well, I don't know. Absolutely, Cal. As far as crypto goes, let's look at gold. I want to look at gold and silver and then crypto, and then we'll call it. Crypto's fascinating because there's a lot going on with crypto. Milei won, I believe, down in Salvador, I think, it's somewhere, or Argentina, somewhere down there. And that was a big crypto place that they wanted to build into a crypto or a Bitcoin-backed government. Interesting. It's all interesting with crypto. But gold, old reliable. Everybody trades gold. This level's turning out to be pretty good, 39.69. Let's take a look at the 30-minute price action and see if we have any tells here of what the institutions are thinking. Big sell-off right there, and that was about, that sell-off sort of coincided with our U.S. oil sell-off, didn't it? Let's go to a 30-minute. Right there. So there it is. Right there, 9:30. Not quite the same game. But interesting stuff because you did have a major sell-off and now you got sort of the pullback. You'll notice that our big level down there was right around 39.69. You went down and tested that, 39.72.50, and now you're blowing up by, $25. So the big thing and all the discussion we just had, commodities go up in those situations. So there's going to be people that are going to flood into safe havens. It's happening right now in front of our eyes. Would not shock me if gold closes positive today. So in a situation like this, I would be looking at macro type of macro technicals for sure. We had a trade idea out earlier this week that we were looking at that EMA down there at 37.87. That was a pretty good one. We just didn't quite get it. The low was 38.86. So we were sort of getting there, but not really. We got a ways to go, but we may get it next month. We'll see what happens in early November if we get the big washout. Chance to step up and buy that. I would love that. That would give me a lot of confidence. I still want to be long gold, and I think so does everybody else. 4,000 is turning out to be a major area. We're seeing compression right around 4,000 almost every day. So, the problem is with a level like a 4,000, just to sort of show you what I mean, is it gets saturated. And when it gets saturated, you don't know what's going to happen there. So I love to trade. 4,000's been good to us. We scalped in front of it. It was beautiful. We bought pullbacks off of it. It was beautiful. But at this point, it's at some juncture, you have to really step back and say, is it saturated? Yes, no question. In my view, it's no longer supported and it's no longer resistance. We had some pretty good stuff right in here. A real good trade that came across the board. A little bit of action here, and then we pulled back, and then we just blew high. Well, once we blew high, look at what happened when we first came down. It was beautiful support there, not bad bounced, and now it's absolutely saturated. We're trading 4,000. There's bidders. There's buyers or sellers. Nobody cares as much. It's becoming more of a magnet, an area of fair value. We've talked about that a lot. Compression around a key number. That's absolutely huge. So when you look at something like this, 4,000, oh, Shane, you long or short for 4,000? You can't really say that you want to be long from 4,000 anymore because we've seen the sellouts. That's a major washout right there. That one came right down to 38.86. I mean, who could hold $114 sell-off in a gold derivatives product? You could if your leverage was low, but at that point, you had to be thinking major correction. Everybody else was. It dropped 1.5% in 4 hours, and so almost 2.6% in 8 hours. That's really a drubbing. That's tough to come back from. But this right here, you're right around 4,000 now. So I don't have a direction. Now, we called our key level right there, which was right around 39.69. Nice little sell-off there and then a bounce. Okay. That's a pretty good way to trade it. Wait for price to deviate from 4,000, then play it back to 4. I don't have a problem with that, but you got to have a level or a technical in there, and we do. We have that long-term level, so keep a close eye on that zone going into Monday's session. But for me, we could easily close positive here. I think there's a lot of folks that want insulation from the risk we just talked about over the weekend. All right, here's silver, 4-hour silver chart. Big gap up, not a gap up, but a nice big run, and then just a bunch of dojis. That's not uncommon. Then a sell-off and a retracement. What can we really say about what to do with silver? It's sometimes you just get a little bit heartbroken. Maybe I should rethink trading 50%. Holy cow. That's just money right there. 45.70 bounces up to 48.70. I don't trade. Sorry, it's a rule. I don't like breaking rules. That's one of my rules. I don't trade 50% unless if we had a moving average right there, then I would have said yeah. And then right here, we were sitting at our moving average again, right around 45. But if you take a look at where this low went this week, it went to 45.55. That's pretty close to 45. That would have been a pretty good area to buy. We were hanging out down there somewhere right around 45 even. So a near miss right in this zone right here. We wanted to bounce off our moving average. Still very bullish silver. I think silver and gold in the worst scenario, they both go up. How much? I don't know. You can't say guarantee either, but I'm pretty sure that we're not done trading 50. I think 50 is going to start looking a lot like 4,000 in gold. So keep a close eye on silver. Big mover and a shaker. All right, we had a crypto request, 109 Bitcoin. We talk about saturated, right? Let's show our monthly level here. Current wave, spike low to a spike high. Pullbacks right there, right around 106.5. Pretty good stuff. So what's happened here? How many days have we bounced off of that as a low? So right up there, there's your tippy top. Top's up there right around 126. So we had significant selling from 125, no doubt about it. Right here, we came down and tested it, and then we sort of bounced back, and then we hit it again, and then we hit it again yesterday. What are we doing now? You guys thinking that we go long again from 106.5? We just talked about the concept of saturation. At what point do the bidders become exhausted? Could happen at any time. This starts to look like we make another leg down. And a lot of folks, I believe it was Ahmed was telling me that the other day about probably going to challenge 100. Shane, you're not a 50% trader. Look at that zone right there. 50% right at 100. It's such a key level. Have we had a full pullback to 100 since we started making these tops up here? No, we have not. That would be really difficult not to buy it. Right on 100, 101, maybe 102.50. That'd be tough not to buy there. Moving average, 13-month moving average down there at 97.6. That's attractive too. Still bullish, but it's clear that we're going to look at a wash out of retail. So if you want to be aggressive, you could buy 100s. If you want to be patient and maybe wait for a great trade, 97.6, 62% down at 94. That zone right there, that $3,000 zone, which really isn't that much when we're talking about, this type of market that's valued at 100, 109, 3,000. So that's about a 3% zone, 4% zone. Look at that. That's when life really gets fun. And the beauty of this moving average right here is because we've had a negative month, we're getting ready to roll over to November. As soon as we roll to November, we're going to get another bar open, and that moving average is probably going to flatten out a little bit because we're at a negative bar. So it's going to give us a real concrete look at a market that's starting to flatten out. Can't really deny that anymore. 3 months, 90 days. This month right here, we thought we were going very high. We went up, knocked out the highs, yearly highs, up at 126, failed auction. If you ever want to know what a liquidity sweep is, I guess that is one. 126. You washed out everybody, and then reverse course back down to, it looks like right now we're consolidation around 110 in Bitcoin. You're probably going to go down and consolidate between 125 and 100. That could last for years. That could last for next year. That's a heck of a range. So right now, I would be inclined to buy the bottom of that range, which is just above 100. Now, if you want to be, if you want to get cute with it and you want to say, okay, I want to be patient and Shane, I want the best trade location on the board, then it's right down here in our 3% range. 97.6 down to 94. Yeah. That's the buy that, the best trade location. That's it. Still want to follow the trend. I want to follow the trend, but I'm also not going to just jump in and buy 110s. Remember the crossover we had going, or that 9 EMA trade that we had going during Powell's speech? It didn't perform badly, but it didn't give us the move that we thought we were going to get. Right now, there is some bearish heat on Bitcoin. It has to do with a lot of the uncertainty that we're talking about here. The government shutdown's not helping crypto. The U.S. government's pro-crypto. And the government's shut down. They can't move forward. They have no budget. They don't really know what they're going to do moving forward. So without that budget, without the ability to directly say, okay, we're going to go ahead and we're going to start building programs designed for crypto, which is what was promised earlier this year. Now you're in a holding pattern. Interesting. Bitcoin, definitely interesting. Let's go to Shiba Inu. This is sort of my pet rock. I call it a pet rock because oftentimes it doesn't move. I come back to this because just for a few $100s, you can take a significant position. And if the thing ever does spike up to be worth a penny, you just get rich. But, it's funny. This type of trading attracts a lot of people. This was just a fantastic month right here. Full disclosure, I got out right in here somewhere. Oh, yeah, it was right down in here. Took a little bit of a profit off my positions. Initially, I had bought some lows, and I got out right in here, right around that crypto banking crisis a few years back, 18 months back. And then you saw it base out and then really spring forward. I mean, that was just an absolutely huge trade, and people made a lot of money on that. This right here, you sort of tested this swing low earlier this month. Really a beautiful buy. I mean, what were you really buying? Your low was right around 6, 7. So if you're buying 7.5s, very nice. Very, very nice. Where does something like Shiba go from here? Who knows? It's an altcoin. It's not Bitcoin. We know it's not Bitcoin. It's not Ether. I mean, even Dogecoin's getting smacked beneath 20 cents now. Could you build a future trading Shiba? You just got to wait for the levels to come into play. Is it out of the realm of possibility if things get bad for crypto here to see Shiba wash out 5? No. But we do know this. History has told us anything. Every time you sort of see a wash out of these lows, what's the all-time low down there? 55. So let's say we go down and print like 49s or something. Odds are you're going to get a bounce back. You're going to get a snap probably right back up to 7 or 8. An area of fair value, we had this discussion the other day, an area of fair value, that's hard to ignore. What is it? Maybe between 10 and 15? Interesting. I'm watching Shiba. It's on my radar. The reason why is, the possibility. This is the all-time range, but just 38%. Just a bounce, even up to half of that is really like doubling your money up. So it's attractive for a lot of reasons. I don't know about long-term investiture. A lot of folks like it. I held it for over a year. Ended up dumping it because once the banks went down, there were crypto banks. I said this could get really ugly really fast, so I got out. But right now I'm looking at it again because you are trading very near the areas where it's just been so attractive for years now. So I'm watching it, and if it comes our way, we'll get it. If it doesn't, it doesn't. All right, let's see what else we got. A couple other things. Absolutely, Cal, you're welcome. Let's see, Ahmed, back at the attacks in the Middle East, it launched the 98 level. If the U.S. attacks Venezuela, I guess we're going to wipe much retail. Well, I think that I don't know really what to think. The Venezuela situation looks like it's going to go kinetic. Is that bullish for Bitcoin? I don't see how. I really don't see how, not in the short term. So let's walk forward a little bit as traders. We need to be forward thinking. We've already got our scenarios. It's not really a decision tree, but just sort of a scenario, a group of different scenarios. So if the United States gets into something sticky down in Venezuela, it's going to be a negative market driver. And by sticky, I mean something that just isn't over quickly. It's going to be a negative market driver for risk assets, more than likely going to drag crypto down with it. To see this happening while the government is shut down, it's going to be interesting to see how things progress. If it's a quick one-off, like we saw in Iran, where it's okay, it's a bombing run, and then that's a wrap, the markets are going to go up. They're going to say, okay, interesting. But how about a third scenario? Let's say it gets sticky for 2 or 3 weeks, and then there's a regime change for somebody who wants to do business with the United States that the United States wants to do business with. You're going to see the markets really go up. And the reason why is number one, stability, order will have come sort of out of a chaotic period, at least in Venezuela's history. And number two, the price of energies is going to go down. So in the short run, it may look really ugly for energies specifically. You may see the big move up in gold. You may see the big move up in U.S. oil and natural gas. Commodities in general, more than likely going to spike. But let's say it gets sorted in like a month or 6 weeks. Can't imagine it going any longer than that. Really, can't imagine that. I don't think the Trump administration will play around like that. I don't think there's any way that it turns into a Ukraine situation. Not a chance. So if it gets settled in regime change is sort of the final game there, and it happens within a relatively short period of time, you could almost see that being a catalyst for 2026. Think about what you'll have now. Think about what you'll have. We already know interest rates are coming down. That's going to happen. All right. It may not, J-Powell and the FOMC may not do it in December, but next year it may be after Q1. They may just hold the line for Q1 until everybody's gone. But we know that the next group of folks coming into the FOMC and the next chairman is going to be a dove. We know that. So we're looking at Q2. You're going to have lower interest rates, significantly lower interest rates. If the Venezuela thing pans out the way that many people believe it will end in regime change, you're going to have more crude oil on the market, right? The global market, that's going to drive prices down. That means energy prices are lower. So you've got cheaper money and energy prices being lower. Everything goes to the moon. What if natural gas goes way down there again? They'll use it to fuel the AI boom. They need energy. So you could see rocky roads ahead, but if things turn out the way that we think they're going to turn out eventually, you're going to be in a position for a bull market in 2026 that we haven't seen in a long time. So I'm sort of an old guy. So as an old trader, this is how I think. I'm already thinking about what to do for 2026. 2025, my calls weren't that great. I thought we were right on top of the tariff plunge back in April, but I thought that was going to get a lot worse, and it didn't. That surprises me. That shows me there's a lot of bulls out there. Could we see a little bit of a crisis towards the end of this year? Yeah, you could definitely see some market turbulence for the next 6 weeks or so. No question about it. We just have to wait and see what happens. But it's a great time to be a short-term trader. There's a lot of volatility out there. Today's not the day to do this. It really isn't. But Monday will be. Monday will be the first trading day of November. I can't wait. I think we're going to see a big-time mover and shaker. If we don't, that's fine. Then we'll settle in Tuesday, Wednesday, Thursday with our battle plan, and then we'll come back around next Friday, maybe with an NFP report, maybe with 2 NFP reports. We don't know how it's going to work. All right, guys, I'm going to go ahead and get going. It's been a long one. I went for over an hour. Typically, we like to get in and get out, so I don't know how many people are still watching, but if you're around, thanks for sticking around. We had a lot to unpack here. I want everybody prepared for that weekend news cycle. Even if it doesn't come, at least we're prepared. At least we're prepared. And if anybody out there knows how many pizzas are going to the Pentagon right now, send me a private message over at How to Trade. Say, yeah, we're delivering a lot of pizzas. Well, let me know, because I would be curious to hear exactly what that indicator looks like. I was really surprised when I saw that. All right, everybody, have a fantastic trading day. Have a fantastic weekend. Happy Halloween. If you're in the United States, I'll be back Monday. The entire stream schedule will be posted inside the How to Trade trading room, so go ahead and check that out. Also, November is coming. The EBT is coming tomorrow. The Venezuela stuff, it's a big time to be in the markets. If you have any questions at all, head on over to howtotrade.com. Send me a private message. All you do is click on my picture, follow me, and then send me a private message. It's good there. I'm on X at ShaneV_trader. I'll probably have a lot of analysis out this weekend, maybe on everything from football to Venezuela. So definitely stay tuned. And as always, trade the action well, and we'll talk soon. See ya.